Ladies and gentlemen, good day and welcome to the Q2FY22 earnings conference call of Greenply hosted by Asian Market Securities Limited. As a reminder, all participant lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone telephone. Please note that this conference has been recorded. I now hand the conference over to Mr. Karan Bhatelia from Asian Market Securities. Thank you and over to you, sir.
Thanks, Jacob. A very good morning, everyone, and thank you for joining us on the Greenply Industries 2QFY22 conference call. In the panel today, we have Mr. Manoj Tulsian, Joint MD and CEO, Mr. Sanidhya Mittal, Joint Managing Director, and Mr. Mukesh Agrawal, CFO. Before we begin, I would like to say that some statements made in today's discussion may be forward-looking in nature and may involve risk and uncertainties. A detailed statement in this regard is available in the presentation that was sent to you earlier. So now I would like to invite Mr. Manoj Tulsian to begin the proceedings of the call. Thank you and over to you, sir.
Thank you, Karan. Very warm welcome to everyone present and thank you very much for joining us today to discuss Greenply's operating and financial performance for Q2 FY22. After the slow offtake in Q1 due to second wave of COVID, we have bounced back in Q2 and achieved highest ever quarterly sales. Assuming no major shock in external environment, we are more than confident to continue this trend for second half as well. The improvements were all across the operating parameters, that is improvement in operating margins, working capital management, and even debt reduction. The reported margins has also absorbed non-cash cost of ESOPs of around close to 3 crores. Due to the same, reported margins got impacted by 70 basis points. As per the accounting policy, this cost would continue for another 6 to 8 quarters. However, the quantum may vary. During the previous year, we have taken further price increase to pass on cost increases, but we all know due to continuous increase in raw material cost price, it's not fully reflecting in the reported numbers. Assuming all such variations get stabilized, we should report improved margins in the coming quarters. To achieve long-term growth plans, we are investing heavily in enhancing our efficiencies by strengthening management bandwidth, making strong processes and systems through IT and automations. Including these additional costs, non-cash ESOP costs and raw material cost price pressures, we are committed to achieve 13 to 14% level of operating margins by the end of next fiscal. I'm glad to announce that we are on the fast track mode in implementing our new projects. Construction activities at Greenfield plywood plant in Lucknow is under full swing. We should be able to achieve COD by Q4 this year. In our new MDF plant in Vadodara, all the major machineries has been ordered, land has been acquired, and preliminary civil activities has also started. The project should achieve COD by Q4 of next year as promised. In our asset-light model, we have 2 JVs for manufacturing of plywood and allied products. The first project has started production of plywood during last year, and now we are fully utilizing this capacity. The second project has started partial production in the last quarter, and balance will start in Q4 of this fiscal. These capacity additions will provide fillip to our growth journey in the next few years. On the overall sustainability of the demand outlook, there might be some pent-up demand, but structurally we are witnessing a long uptrend in housing and related furnishing industry. The other macro economic details also which we have seen are all positive and we feel the market will remain very buoyant for our industry. In addition, the supply side bottlenecks reducing business visibility for unorganized players and consumer shift towards branded products leading to growth of organized segment at the cost of unorganized segment is also another positive parameter. We feel improved outlook of infrastructure sector along with improving consumer optimism will support and enhance business growth in next few years. With this, I would like to hand over the call to Mr. Mukesh to discuss our financial performance. Mukesh.
Thank you, sir. Good morning, everyone. I thank everybody for joining us to discuss the Q2 FY22 financial performance of Greenply Industries Limited. To continue with Manoj's remarks, we have achieved very strong business traction in previous quarter. Our consolidated entities net sales for the quarter stood at 430.8 crores compared to 294.6 crores in Q2 FY21, an increase of 46.2% on YOY basis and up by 65.6% on QOQ basis. Consolidated gross margins remained at similar level with Q2 FY21 at 39.6% and EBITDA margins stood at 12.0% versus 11.4% in Q2 FY21. Revenue includes GST refund of rupees 1.6 crore in the quarter. For H1 FY22, revenue includes GST refund of rupees 2.3 crores. This is from one of the units which is an operating income. Net sales for the half year ended September 21 stood at 690.9 crore compared to 426.8 crores in H1 FY21, an increase of 61.9%. Consolidated gross margins stood at 41% in H1 FY22 compared to 41.7% in H1 FY21, with a marginal decline of 78 bps on YOY basis. EBITDA margins stood at 9.7% as compared to 7.2% in H1 FY21. Standalone net sales in Q2 FY22 stood at 374.6 crore versus 237.4 crores in Q2 FY21, an increase of 57.8% on YOY basis and up by 76.1% on Q-on-Q basis. Standalone gross margin for the quarter declined by 133 bps to 38.3% on YOY basis, and EBITDA margin stood at 12.8% as compared to 10.6% in Q2 FY21. PAT stood at rupees 29.5 crores as against rupees 14.3 crores in Q2 FY21. Our average realization in plywood came at rupees 233 per square meters in Q2 FY22 as against rupees 211 per square meters in corresponding period last year. Standalone net sales in H1 FY22 stood at rupees 587.3 crores as against rupees 344.5 crores in H1 FY21, an increase of 70.4%. Gross margin stood at 40% in H1 FY22 compared to 40.1% in H1 FY21, with marginal decline of 13 bps on YOY basis. EBITDA margin stood at 9.8% as compared to 5.8% in H1 FY21. On consolidated basis, debtor days have reduced to 48 days from 53 days as on June 2021 and 90 days as on September 2020. Working capital days reduced to 38 days when compared to 63 days and 80 days at the end of the sequential and corresponding quarters respectively. Quarterly sales for our subsidiary Greenply Middle East declined marginally by 1.7% on YOY basis. For half year ended September 2021, net sales for our subsidiary increased by 25.9%. With expectation of improvement in freight cost and container availability, we are expecting better result than posted. We hope normalcy will return for our Gabon operations in coming quarters. We incurred plywood maintenance capex of rupees 8.17 crore for India business and maintenance capex of 1.7 crore for Gabon business in H1 FY22. Our balance sheet continues to be robust. Consolidated total debt is at rupees 186 crore as on September 2021 from rupees 186.8 crores as on June 2021. Consolidated net debt ratio continues to decline and standing at 0.12 as on September 2021 from 0.19 as on June 2021. I would like to hand over the call to the moderator to open the floor for Q&A session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shreyansh J from Quest Investment Advisors. Please go ahead.
Hello.
Yeah, Shreyansh.
Good morning, sir. Thanks for the opportunity. Congrats on a good set of numbers. Just wanted to understand.
Your voice is not very clear, Shreyansh. Can you be near to your handset?
Hello, can you hear me now?
We can hear you, but anyway, carry on.
Better, but
Yeah. So just wanted some sense on the industry. A large part of the market is unorganized. So could you help us understand on how the unorganized players are behaving? Is there any comeback from them, or do you think a large part of the growth is market share gains as
Well, yes, I think, if you look at Q2 per se, there's some pent-up demand, which is like a, follow-up demand, because we all know Q1 there was a disturbance. But more so, I would agree to your second point that, there is definitely a shift which is happening from unorganized to organized market. There was a IMF report also which, tracks how the Indian economy is performing on a informal economy basis, which I think SBI somewhere then used those data to publish sometime in early this year. That clearly shows that there is a big shift, which has happened in the last 10 years. And in the last 4 years itself, if you look at, construction business, which used to be at around 75% informal, is around now 35 to 40% informal. That shows there's a big shift, from informal to formal. And if you see the real estate side of it, their data shows that 53% informal in 17-18 is now close to around only 20-25% in 2021. So these are lead indicators which clearly shows that. Now coming to the ground level, I can only say that one of the market which is a hub of manufacturing for these small players, there we found out that there is a 30% reduction or shutdown of manufacturing units. Now whether they bounce back, whether they open, is something which remains to be seen, but that is where we stand today after the second wave.
Okay, so continue. Do you think so FY22 will be good on a lower base of FY21? So do you think this kind of growth rate will be sustainable going ahead? Like, so you've given your commentary for H2, but what I'm trying to understand is FY23, FY24. Do you think these kind of growth rates can sustain, or do we try to taper down our expectations?
These kind of growth rate means what number you are talking about? The growth what we have got in Q2?
Yeah.
No, of course not, because these are numbers which also, as I said, is also because of the pent-up demand, and a follow-up of what we could not sell in Q1. So it's a mix of both. But I think yes, looks like if you look at organized players, the way things are changing, a good double-digit growth is very much possible. If we do the things in the right perspective, companies which do the things in the right perspective can continue to grow at double digit, even if the overall business does not expand in double digit. So we are very bullish to that extent, and we are gearing up ourselves on a daily basis. We are keeping track of all the parameters which can affect us or which can affect our future growth. And we are working on all the dimensions to make sure that, yes, if the opportunity is there, we do grab that opportunity. That's why if you'll see, we started our Sandila plant also. We announced it around almost 6 to 8 months back, with the clear intention that, by the time we are able to use our entire capacity for this year, we have another capacity of another 20-25% in our hand to cater to the demand for next year and next to next year. And of course, we don't stop there. We continue to still look at, what we need to do in terms of enhancing our supply side capacity going forward. Okay. So not trying to get any guidance, but just rough cut basis, if I do your trailing 12 months top line, it comes to about 1,500 odd crores. And now next year your UP plant also comes into operation. So I think that could do about 250 odd crores. So is my understanding correct when I try to think that we could do about 1,800 to 2,000 crores of top line for FY23? I wish we do these numbers. All our efforts would be in that direction, but it is slightly early. I'm sure that we would be planning things that way, but it is still early days. We have to see quarter by quarter, and but we are geared up from the supply side at least to cater to a demand like that. Okay.
And so last year, Q3, you had spoken about improving your margins by about 300 to 400 basis points, and that is visible. So just want to understand the sustainability of that front. COVID, so we have improved some of our expenses. Do you think that is sustainable going ahead, in the sense that when I'm looking at your staff cost, there's not much operating leverage that's coming into play. Your staff costs have also gone up by 40% YOY and 13-14% QOQ. So just wanted to get some sense on the sustainability of the margin.
See, there are 2-3 things in that. One, for sure, we mentioned that we'll improve our margin by 3 to 4%. We are still very gung-ho about the same, that it's a sustainable improvement which can happen by the next end of next fiscal. And having said that, I also mentioned at that point of time that we are investing. So investing does not only mean capex; it also means a lot of OPEX expenditure which is going on. Hiring of new talent, investment, a lot of investment on OPEX is going on the IT platform also. Even on our on the marketing side, on product innovation. So all the fronts we are spending money also. And that's what you're trying to refer. Despite all those, we clearly still feel that reaching around 13% plus by next fiscal end and sustaining that margin should not be difficult.
All right. Thanks a lot, sir. Thank you. I'll get back to you.
Thank you. The next question is from the line of Sneha Talreja from Edelweiss Securities. Please go ahead.
Hi, good morning, sir, and thanks a lot for the opportunity. So just a clarity to the margins part that you mentioned, so you're talking about 13% plus by FY23 end, not for the complete year, right?
Yes. So we are talking about a stable margin base of around 13 to 14% in Q4 of next FY, which means the subsequent year for the full year we can see that type of margin.
Right. And eventually you want to take this to around 14 to 15%, which was your previous guidance.
Well, the wish list is always there, and I think we are taking baby steps. As I said that we continue to invest in our business, and the whole idea is to be future prepared, for next 10-year cycle. Okay, there's humongous opportunities which we are able to see, and I'm sure you people are able to see it across the sector for the branded goods.
Right.
So maybe I can still compromise 0.5% on the margin, but on the initiatives which we need to take and reinvest on the business, those will all continue. So this is a guidance where if my expenditure side improves further, it may happen that I'm still short of maybe 50 basis points or something, but to protect that guidance, we will not stop taking any initiatives which we need to take to build up the organization.
Got that, sir. So just wanted to understand one thing. After a long time, we started seeing capacity additions happening in the plywood space, whether it be you, the other leader, or in fact some even smaller guys that we are hearing of. And you also mentioned that one part of the place which is a hub for plywood manufacturing, around 30% of the production is impacted. Are you seeing some smaller players also trying to in that case do some capex, or are they absolutely impacted and no capex going on there?
We have not heard anything major as of this time, and it's actually very fragmented. So at least I have not heard any such things on a larger platform.
Sure, sir. And what about MDF segment?
There is always a difference in the risk-taking ability also for those people, because they are not selling branded goods.
Right.
Okay. And when they see in that market that there are already closures which is happening. And what is that which differentiates between the organized player and the unorganized player? We all know that it is the cash economy which majorly differentiates.
Absolutely.
And I have been advocating this, the way things are transforming in our country, including the GST compliances and, the other IT platforms which, the government has been adopting everywhere. I only see the iota of correction going forward, which means that the differential pricing what they were enjoying will only cut down, and which does not really give them a reason to increase their production output, unless they also mentally try to convert themselves and start billing everything on full price basis.
Sure. Sir, got that. Sir, anything that you're hearing on the MDF front, apart from you and the major leaders who have already announced capacity additions, are you also seeing some aggression happening from the smaller players side? We already have seen, huge amount of capacity additions coming from even smaller players this particular year, which, accounts for maybe closer to 25 to 30% of the overall capacity already. Are you seeing some amount of aggression even coming from there or some other larger player trying to enter the industry? Some insights on that?
Look, there are limitations if you really look at on the MDF business in terms of scaling up operations. Either there is German technology or there is a Chinese technology. So most of the major players, are trying to use the German technology only. And I think now that we are into this and we are already in touch with one of the major German suppliers, we know all their lines and capacities are full up to FY24. Okay. So we don't see anything major coming up. Something small in bits and pieces may come up, but that technology can be very, very different and nowhere near the technologies which the major players are using. So that can be some small quantities in a few pockets, but we don't see any major thing coming. At least, in the public domain, we don't have any such knowledge. Right?
Sure. That was helpful, sir. Got that. We'll get back in the queue. Thanks, sir.
Thank you.
Thank you. Ladies and gentlemen, we request you to limit 2 questions. The next question is from the line of Venkat Samala from Tata AMC. Please go ahead.
Hi, sir. Thanks a lot for the opportunity. Sir, hello?
Yeah.
Yeah. So I just look at the volume numbers and compare it with FY20 numbers. We see a volume growth of about 2% in the ply segment, right? I'm talking about the standalone entity, that is. So when do you expect to get...
Sorry to interrupt. Sir, your audio
volume
is
growth
not
numbers?
clear.
Yeah.
Just a second. Hello?
Yes.
Better now?
Yes, we can hear you. Please
Yes,
proceed with
yes.
the question, please.
Yeah. So I'm just trying to understand if I compare the volume numbers with FY22 figures, so I volume growth of about 10%, and I understand the long environment to organize
We are not able to follow
Sorry to
you.
double
interrupt.
digit.
Sir, again, your voice is breaking. May we request you to come into reception area?
Hello.
Sir, your voice is breaking in between.
I'll just join back in the queue then.
Yes, please.
Yeah.
Thank you. The next question is from the line of Akshay Cheda from Canara Robeco. Please go ahead.
Yeah, hello. Thank you for the opportunity. So my question would be, sir, you did mention that the differential pricing between the organized and the unorganized player is coming down. So can you just
Sorry to interrupt. May we request you to speak louder or come closer to the phone?
Hello. Yeah. So you did mention about the price differential between the unorganized and the organized sector coming down. So can you quantify it, like how it was, say, 5 years back, 2 years back, and what is it currently?
Well, I think, if you look at around 5 years back, that gap was almost around 20 to 25%. Okay, which today, post the GST implementations and everything and other strictures which has happened, it has reduced to somewhere around 8 to 10% now.
Okay, got it. Thank you, sir.
Thank you. The next question is from the line of Achal Lohade from JM Financial. Please go ahead.
Yeah, good morning. Thank you for the opportunity. Sir, my first question was just a clarification. You mentioned that the German vendors have indicated that their capacities are booked till FY24. Did I hear it right?
Yes. That's what, we have been given an impression. With all the orders which are already there in their hand, I'm not talking only from an India perspective, right? But that is what they are trying to mention to us, that we are full till FY24. Whatever orders have come, they are full up to FY24.
Got it. My second question was, I think Venkat was asking the same. While on a YOY it appears massive growth, if I look at compared to FY20, 2Q FY20, the growth is just 2%. So what I wanted to check is that, in terms of the backdrop of significant reduction in the ready-made furniture imports, a significant pickup in terms of real estate inventory absorption, and a significant impact on the unorganized. Do you see that this is probably the rock bottom number, and we can only improve significantly from here on and go back to double-digit growth?
Yes, the indicators shows that yes, we can go to double-digit growth, and which is actually, so we are again not talking about the market expansion. We are talking about growth for the organized players. That is one. Second, when you are saying ready-made furniture is still, a lot of business is shifting to MDF, right, rather than ply. So that is the category where we are getting entry, and maybe from FY24 we are also there. And so yes, I would say that a double-digit volume growth is possible. We were also talking about 6 to 7% growth. That is what internally we were targeting. Looking at the way the things are, we can even target a double-digit growth.
Understood. And if I compare all last 12-18 months cumulatively, would we say that we have gained market share compared to the other organized players, or it could be just static or modest market share loss? I'm talking within the organized players, sir.
No, I think how we are looking at it is, as I said, we are looking at it is the opportunity which is there this time for conversion of the market from informal to formal. Okay, and there are only few large players into that. I think there's a good opportunity for all of us to do the right things and grow and gain share from the informal economy.
Understood. If you could just help us with the mix in terms of the mid and the low end volume mix for the quarter and same time last year.
There's a 4% shift, if I recall. It's there in the presentation, no?
Yeah. In quarter 2 FY22, in the volume terms, we have from the manufacturing we have 56%, and from the trading activity we have 44% in the volume term, and in the value term 65% contributed by the manufacturing facility, and trading facility contributed around 35% for the quarter. And for the half year ended, 58% from the manufacturing in terms of volume, and 42 in terms of trading activity, and in terms of value, 67 contributed by manufacturing facility, and 33 contributed by the trading activities.
And I would, offer one clarification, which I think is a change which we'll make from our next time presentation. The trading number also includes the contribution of the JV sales.
Already included.
Right. So that we will differentiate because JV is in
trading activities.
I know it is in trading activity, but within trading activity, we should differentiate between what we are buying from our JV because they are 100% for us, right? So it's like a back-to-back full manufacturing. So this trading number, what you are seeing, also includes the impact of the buying what we do from JV, which is 100% back-to-back arrangement.
Right, and the entire mid and the low end is trading. Is that understood, right?
Mr.
Right.
Just a clarification on that.
To return to the question queue, please.
There
are several participants waiting for their turn.
All right. Thank you.
Thank you. The next question is from the line of Rishikesh Bhagat from Kotak AMC. Please go ahead.
Morning, sir. Thank you for the opportunity. Just on the employee cost increase, I believe there was some impact of ESOP. What was the ESOP charges in this quarter, and how long will they continue?
3 crores is the cost for that, and it's a variable number, which is calculated basis the market price and other factors. And this will taper down going forward. This year, I think it will continue at a run rate of 3 crore per annum. Next year, it will be slightly lower, and the year subsequent, it will be lower. And that is basis the existing ESOP what has been given, and new ESOP which will be given will again bring in new costs.
Okay.
To be more precise, the existing one will continue for another 8 quarters.
So to be more precise, this quarter, as Manojji said, is 3 crore, and full year it will be around 12 crore, and next year it will be around 5 crore.
Okay.
And in subsequent year, another 2 to 3 crores.
But by the time, if you really see, new ESOPs also will get issued. So
Okay.
that number will be there in that range itself.
Okay. Okay. The another clarification is on just on margin. This margin guidance is largely should be read as like plywood plus Gabon operation, what you give 13-14%, right? It doesn't include MDF or anything.
No.
Okay. Okay. Thank you.
Thank you. The next question is from the line of Bharat Seth from Quest Investment. Please go ahead. The line for Mr. Bharat is disconnected. The next question is from the line of Sonal Kohli from Bowhead. Please go ahead.
Sir, when you're talking about the double-digit growth rate possibility, because of so many base impact, etc., I just wanted to really clarify it in absolute terms. So should I analyze this 375 crore number and then take a double-digit growth from that? So basically from a 1500 crore base, a double-digit growth possibility, is that what you are referring in the, in the answers to the previous participants?
Well, we are already growing at around 3 to 4%, and I would say that this 3-4% growth can go up to 10% growth.
So by that you mean revenue or do you mean volume, because you have been taking continuous price hikes?
Sorry?
Are you referring to volume or value growth when you talk about this growth?
Volume growth.
On the base of Q2, right?
Yes, you can take that. That opportunity I'm sure will open up, and we definitely are looking at that type of an opportunity.
Sir, our growth rate has been greatly lower than competition, and a few quarters back you said that, because of your credit policy, we are seeing an impact of that and there's enough demand in the market and you could have sold much more. Does that still continue? And if so, when do you see the impact of that, relatively reducing? Are you tightening further? Have you tightened further in the last 1-2 quarters? Or has it been stable? And when do we stop seeing the impact of this if this is still continuing and you will achieve on a steady state basis? And lastly, what will be your peak debt at the end of 2023 and end of 2024? Net debt, post cash, considering your capex needs of MDF and your working capital needs. Thank you.
Sorry, what was your first question on? No, so I think that correction, most of that correction has already happened. Okay, and today, whatever performance you see in Q2 has not got influenced at all by any such corrective actions. We have done most of those things. So basically the same, we stand where we stand. And in terms of debt profile, I think by next year end FY23, our debt equity can be somewhere around 0.75, 0.8. What we look at is the maximum, debt equity ratio will reach to. That will be the peak, and then we again start coming down. So at 0.8, we are assuming that it can be close to around 500 crores of debt, max.
So this is net debt or gross debt are you referring to, just to re-clarify?
Net debt.
Gross
net
is...
Debt. No, this is net because see, in the next 12 plus 6, 18 months or 16 months, we will also be investing on the equity side close to around 150 to 160 odd crores.
And sir, considering your credit policy is stopped, why are we going lower than competition? Do we have any capacity constraint or what is it? Considering there are only two large organized players, and if I compare your revenues, the other player has grown much faster. Is there something we need to do, or is it something we are doing about it to reduce the gap? Because the gap has increased considerably in last, few quarters. We thought it was led by credit policy, but as you yourself said that, that has no more having any incremental impact. If you could show, tell us what's happening on that front and, what are we doing about it? Thank you.
Look, every company has their own way of, looking at their own strategy. Okay. So it is not fair enough for us to really comment on the other player. They have their own strategy, how they want to grow, whether they want to, because they have different line of businesses also. and on which business, what strategy they adopt is something which remains with them. In terms of our own business, we were definitely, after doing so much of correction, you should know that there is always a pressure which is still there. So it's a hidden pressure which continues. There are people who are still watching us, because old habits die hard type situation. When you have done something for ages, and when you change those things, you are always being challenged on every moment. Keeping those things in mind, I think the type of numbers what we have done in Q2 gives us a good reflection that we are on the right direction. And the way we are working on major parameters, which I said, whether it is technology, whether it is innovation, whether it is IT, whether it is logistics, whether it is marketing, branding, and distribution. So I think we are on the right path. And two large players, we have enough opportunity to grow. So if you really ask me, it is actually organized versus unorganized. Rather than looking, it's a smaller pie itself in the organized market. We should look beyond, and we should see that how we can grow at a healthy pace. And then, like we are doing many things which we are trying to correct now. So I am sure that these things will reflect in the future. Our growth can be phenomenally different. So I would not look at very short-termist things and, jeopardize my own strategy.
Great. Thank you so much, sir.
Thank you. The next question is from the line of Venkat Samala from Tata AMC. Please go ahead.
Hi. Am I audible now?
Yes.
Yeah. So it's just a follow-up of the previous participant's question. It's just that, if I compare our growth in Q2 FY21 versus Q2 FY20, Q2 FY22 versus Q2 FY20, in volume terms, we've grown up around 4-5% versus competitor who's grown upwards of 40%. So there's a large divergence, right? And in terms of opportunity size, it's the same, right, for both of us. So I was just trying to understand. So broadly, what you're saying is this divergence should narrow down moving forward?
Well, actually, I don't know about the other number what you're talking. I know about my number for sure.
Right. No, I'm just talking about the ply growth. Whatever is the reported number, I'm just quoting that.
Yeah. So we have not looked at it that way. And, once now that you have given this feedback, we'll look at it. We can come back to you. But I for sure see that, if you really see a trend of plywood industry in the last 10 years, the growth has been minimalistic, if you see in terms of volume. If I see our own numbers, we have just grown at around 1%, 1.5% stagger. Okay.
Right.
So from there now suddenly, and then I also know that people were just writing off plywood as an industry by saying, all the growth will come in MDF only, whereas we definitely had the view that plywood is such a large business, and the way, if you see the product differentiation between plywood and MDF, still today the stability and the strength of plywood is much above MDF. Yes,
right.
Of course, MDF has varied applications, which is an advantage when you look at MDF as a product. It goes beyond furniture also. Right. So I think this is the industry which is there to grow, and with corrections which is happening within the country, and the macroeconomy also showing many of those parameters which is very positive. Like real estate, where we have seen some of the data of real estate. Real estate is also bouncing back. They're showing some good. I think maybe a growth of 25-30% is something which we are assuming. Now that growth will also happen because maybe in tier 2, tier 3 cities that growth will happen. Second, the growth will also happen there possibly because the prices have stabilized. The prices will not move the way it was moving upwardly in the last 1 or 2 phases. So which means more volume gain there also. It gives us an opportunity to see more sale of plywood.
Right.
And this work from home concept also, which is getting traction, especially in the IT, is also something which will push house sales and will push better furbishment and better furnishing. Where again plywood will be an application, rather than maybe MDF, because when you try to do something long term in your house, you will always prefer plywood over MDF. When you look at a short-termist thing, or when you are trying to furbish your rental house or your investment house, you will try to look at MDF. So we see that there is an opportunity clearly, which is visible. But look, we cannot really foresee everything. I mean, then we would have been God actually. It would have been. right? It's optimism and it is getting reflected. And then there are those indicators basis which, we feel that the opportunities are going to be humongous. We are preparing ourselves for all those opportunities. We may still miss out on few, but we are trying to see that, we try to grab maximum opportunity which we get in the next 3 to 4 years.
Right. Fair enough. So the double-digit growth that you're foreseeing to grow in the near to medium term at least, versus the pre-COVID numbers. So would that be visible starting next quarter? Meaning, would there be an acceleration now in the growth that you are seeing?
No, I would say that we will be able to see that next year. Okay, because suddenly when you see that every so gung-ho, and I said we are also trying to do too many things at the same point of time. We are on a transformation journey, right? We are preparing ourselves for the next decade. So when you do so many things, at times you will miss out on a few things in the short run. But as a unit, we are all happy because directionally we are right.
Understood. Right. And we've added a lot of new dealers, right, in the last 12 to 18 months. So could you quantify what could be the contribution from these new dealers added in the current revenue?
Well, see, we have done around, I would say around 6 to 7% additional sales from the new dealers which we have added. While we have done that, we have also had a lot of learnings that, though we did so, there were some, operational issues which we faced. We are correcting many of those things. So we also realized other challenges while we were doing so. So we are correcting some of those operational issues. I think it's a good job which our team has done in the past 12 to 15 months. And with those corrective actions, we can improve that percentage further going forward.
Understood. And my last question would be, now we are expecting the MDF plant a little earlier than what we had originally planned, right?
No. We initially also given a guidance that we'll do it in Q4 of FY23, and we maintain the same.
Okay. I was thinking H1 FY24. So then the plant will be operational for the entire 24? Is that right?
Well, yes, but it actually, there is a ramp up always which happens in the same.
Right.
From day one, it cannot run at full capacity. So it minimum takes anything between 6 to 9 months to ramp up properly. So it moves from a 50-60% utilization to around 80-85% utilization if everything goes well over a period of 6 to 9 months.
Right.
But
so
yes,
what could be the effective capacity utilization levels that we can expect for F24 for MDF, and the margins?
Well, margins, very difficult to say right now. We had done all our projections on a margin which was much lower than what the industry is today getting. Okay. We had seen all our viability basis of margin which was almost 1 year back. Today, if you really see, I think these are the golden period for MDF business.
Right.
So if the same trend continues, I think our decision will be more than correct and justified, and getting into MDF at the right point of time. And in terms of capacity utilization, I think year one for full year, if you really look at, we should be around 50 to 60% capacity utilization.
Okay.
By quarter 4 of that year, we might reach to around 80%, but for the full year, it will only be around 50 to 60%.
Understood. And by for the full year, will a mid-single-digit EBITDA be possible, or it will be close to break-even only?
In the first year, at 50-60% utilization, we will only be a break-even.
Okay. Understood. Thank you. Thanks a lot, and wish you all the best.
Thank you.
Thank you. The next question is from the line of Romil Jain from Electrum Portfolio Managers. Please go ahead.
Yeah, hello. Sir, can you hear me?
Yes.
Yeah. So my question is, we were doing some channel checks, across Mumbai. So, what we are seeing is that the retailers which are there, they don't seem to, kind of sell branded products, be it your company or be it any other branded products, and they are still selling a lot of unorganized, products, and they are trying to somehow persuade the customers to buy those. and I think people are kind of buying that. So any reason why they are not selling these products in spite of better product aesthetics, better product usability, quality, everything? Because I mean, obviously there's a big price difference which we see. So any thoughts how we can change that perception?
Look, the answer is simple. I mean, I'm sure you would have done such channel check even for other products where the unorganized market is much, much larger than the organized market. It's a basic tendency which you will always see. So the branded goods pulls basis the consumer demand. Because in any case they see slightly better margin when they look at in terms of percentage. When they look at, they find that they are making better margin by selling unorganized. When they will look at square feet conceptually, they will find that they are making almost similar margins with less hassles dealing with organized players. So that's a mindset issue, right?
Correct.
Where we stand, I mean, if we talk, it's all about consumer demand generation. If you know or if you are convinced that you only need to buy a branded plywood for your next house furnishing, whatever the dealer may say, you will still stick to your own wisdom.
Correct. You are right.
Something, then they will always push because they see better margins there.
Right. So yeah, of course. I mean, from the organized players, I think there needs to be a lot of more push on the retailer side that they also sell these products.
Well, absolutely, it will happen. The industry is so large. Okay, if you totally see what is the size of the organized market to the total market, that is the reason it is minuscule. So your analysis is absolutely right. It's out of 10 counters you will visit, you will find in 8 counters today also, which the same sample size that 80% of the market is unorganized. So you will see 8 counters persuade you to buy the unorganized stuff what they are carrying. And only 2
and so
branded ones.
Right. And so the commissions that they earn, are they really different between, let's say, an organized or an unorganized player?
So as I said that, there are lots of ifs and buts, everything, so I cannot tell you here on such a large forum.
Right.
But there are lots of ifs and buts which they try to play with to add some additional margin. The way things are happening in this country, GST regulations, other things which is happening, you will see slowly, and the last hit to them can be a reduction of GST rates, which I am sure will happen whether in next 12 months or 24 months. We see that the GST rate reduction is possible. Once that happens, then that differential gap reduces significantly, and then that size of the industry shrinks further. It will still remain, but it will shrink further.
Got it. So second question is on the MDF side. So I just want to understand your thoughts on branding, because obviously once we split and we formed a green panel, so they are also there. So what is your thoughts on how we brand? Will it be Greenply, MDF, or some other name? Won't there be any confusion later on? Any thoughts on that?
No, there is no confusion on that. We are allowed to use Greenply as a brand also. That's a clear understanding in the family. However, we are still contemplating what is the brand name which we are going to use. But there are no restrictions and no confusions either in the family or within the house.
Okay. And lastly, on the blended margins, post the MDF comes through and operates at maybe 60-70% utilization in 24. Any sense you can guide on that?
Well, look, today if you really look at, MDF is throwing a margin of 30% plus to the players. Okay. And we are in plywood category, which is throwing us a margin of, let's say, around 12% today, 12.5%. We are looking at 13 to 14% margin.
Right.
So the blended margin, in any case, after MDF almost reaching 80-90%, will improve further only. At this point of time, we have not done those calculations. I think in future also, it is always better to look at.
Yeah, it should improve. Correct. It's a more higher margin business, but a higher capex business also.
Yes.
Right. And the ROC also incrementally will improve, right?
So ROC, I think even plywood business will show very good ROC. If you look at standalone, I am sure today we are close to around 20-30%. Even today we are at around 28-30% ROC. And
Right.
at that EBITDA margin, if the EBITDA margin continues at 30%, I'm sure even that business will throw us a similar type of ROCE.
Okay. Okay, sir. Thanks a lot and all the best.
Thank you.
Thank you. The next question is from the line of Karan Bhatia from Asian Market Securities. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, on MDF capex, do we see any cost escalation as we've seen all commodities, hitting the roof?
Very interesting question, boss. You have had some calls. Okay. We are trying our best to do everything within the number which we have given to the street and to all of you. We are trying our best. I think still there are no major surprises which we see. In fact, we were trying to cut down on the same, that we would be able to save something, which for sure doesn't look like any possibility. And some of the commodities we all know have gone crazy. Even the manufacturers, machine manufacturers, are slightly risk averse. You know how the international market works. It's a challenge, but I think we'll be able to manage with no major surprises on the upside.
Right. That was very helpful. And sir, one more thing, we've seen solid advertisements, for our products like zero emission or firewall for that matter. So how has been the contribution for first half, if you can quantify, compared to 1 or 2 years back?
Can you repeat the question?
Sir, we've seen a good acceptance of technologically superior products like a firewall technology or a zero emission kind of products.
Yeah.
So how has been our premium portfolio growth rate compared to the mid and the lower category growth rates?
No, in terms of mix, if you will see, there is a shift which we said, our trading mix has gone up. Look, these are certain things which, when your unorganized market is so huge, these are certain things which has to be pushed continuously, because there is a humongous amount of dealer voice which is there when the unorganized market is so big, a retailer voice. And when a customer goes half-heartedly with not that conviction and wisdom, as I mentioned some time back, they can always tell them, sir, these are nothing, I'm telling you, I'm sitting here, I'm giving you this, please buy this. So this is something which has to be hammered over a period of time. It's a sea change which some of the large organized players are bringing into this industry. I would say that, we have to continue to strive on the same, and we will see changes happening in next 12 months, 18 months. We can't see a big, large change, though the impact is very positive. Today, when we talk to the architect community, they are very, very gung-ho that, Greenply has done a great thing by bringing in zero emission as the first company in the country in plywood as a segment. And so this conversion will happen slowly. You will not see a major impact of this in a quarter or two. It's an incremental advantage which will keep building on.
Right. Thank you. That was very helpful.
Thank you.
Thank you. Ladies and gentlemen, we request you to limit your questions one per participant. The next question is from the line of Pritesh Chheda from Lucky Investment. Please go ahead.
So on the ply side, what is the capacity utilizations that we have, and are we constrained by any chance by any capacity, or which will get resolved post Lucknow capacity coming in?
We are almost today, if you see on numbers on table, we are at 100%. Okay, but then we are doing some more line balancing because we could foresee this situation. So for the next 2 quarters, we don't see a real challenge. And by that time, we will have our new facility in place. So for next year again also, we don't see any major challenge to cater to our requirements.
So this line balancing and all can add what, 10-odd% to your run rates of 370?
Yes, so as in the opening speech I mentioned, one of my JVs, the second JV had just started production in Q2, and that also only on 50% line. So the balance 50% line will become operational in Q4. Maybe, it might be December by the time, so Q3. So by the time we get the impact of the same, it will be Q4 in terms of production. So we have that as an additional capacity. We also have additional capacity, unused capacity of the second plant first line, and then some more balancing what we are doing intermittently. So we can still grow by 10% to 12% in these 2 quarters if the demand is there.
Okay. And the ply expansion for which
Mr.
you
Chheda,
mentioned.
sorry to interrupt. May we request you to return to the queue for
Sir,
follow-up
it is the same question. I have to just. Is the capacity?
Yeah, please allow him. Please. Yeah, please carry on.
Sir, so you mentioned this 250 crore revenue potential for the ply expansion. So the asset turn there on the capex that you are doing is how much?
See, if you look at on the P&M base, other than the land, it will be like 3 to 3.5 times.
But what is the capex number?
70 to 80 crores other than land.
Other than that. But you had the land earlier.
See, this land chunk we already had, since many years.
Okay.
Yeah. And that's a large chunk of land. We are hardly using maybe only 20-25% of the land. 30%. So 25 to 30% right now only for this production line.
Okay. Thank you very much, sir, and all the best in season. Thank you very much.
Thank you. The next question is from the line of Nikhil Agarwal from VT Capital. Please go ahead.
Yes. Good morning, sir. So you have given the volume growth guidance. So anything on the revenue growth guidance with the price hikes you are expected to take going forward?
Look, I think enough price hike has happened this year, and we don't see raw material prices further going up. So as it looks like today, for next year, we don't see that there will be further price hikes. Okay, 1 or 2%, maybe depending on how the market behaves. So the overall growth will be in double digits, as we said, anything between 10 to 12%, 13%, right?
Okay, sir.
Anything between 10 to 15% for sure.
Okay, sir. So this is for the second half of 22 as well?
No, second half of quarter this year, you are saying H2?
Yeah, H2 FY22.
H2, as I said, that we are trying to see that if we can replicate Q2, multiply by 2 as H2. That is what we are trying to.
Okay. This is. So there's one more question. Can I ask?
Yeah.
So could you help me with the cost of wood that that you have to pay for 1 kg wood? What is the cost that you pay now and what you paid in Q1?
No, your voice is not clear.
1 kilo.
Hello.
Mr. Nikhil, may we request you to speak louder or come closer
Hello.
to the phone? Yeah, you are.
Hello. Am I audible?
Yes, you are audible, sir.
Yeah. So I wanted to understand the cost of wood. What is the cost of wood that you're paying now, and what was the cost that you were paying in Q1?
There's a 6 to 7% increase which we are seeing between Q1 and Q2.
Okay. So could you help me with the cost per kg right now?
Well, I don't have the exact numbers at this point of time. We can get back to you on this.
Okay. No issues. That's it from me. Thank you, sir.
Thank you. The next question is from the line of Sonal Kohli from Bowhead. Please go ahead.
Sir, in answers to one of the questions, you mentioned that you expect to break even in MDF in 2024. My query was, when you were saying break even, did it imply EBITDA, EBIT or PBT?
Just 1 second. That is PBT break even.
Including the working capital needs for the plant?
Yeah. See, and then actually speaking, again, what we are talking is basis a 22%, 23% EBITDA margin. If it continues at 30%, at maybe 60% also will end up being positive on PBT.
So secondly, sir, what will be the average debt cost you are expecting? You said your peak debt would be 500 crores, but what will be the average interest cost based on today's rates you expect, for this debt?
Standard rate can be anywhere around 7 to 7.5%. 7%, I would say. But I think these rates will also go up in next 6 quarters or so. So by the time we get our entire funding and this, maybe slightly the rates will go up. That's why I'm saying around 7%, 7.5%.
So we are adding the forex fluctuation. So for this MDF project, we will take foreign borrowing also. So we are considering the fluctuation in forex cost.
And sir, between now, since your balance sheet is out now, and end of 2023, what is the total capex cash you're going to spend on your capex?
What is the total?
Capex you are going to do between 30th September of 2021 and 31st March of 2023. What is the total capex you're going to spend?
Well, see, 550 odd crores we said for our MDF. For Sandila, most of the capex will go now, which is close to around another 70 odd crores, right? So for 620, and then my regular maintenance capex of around 20 to 30 crores
for India business and Gabon business.
So around 650 odd crores I think would be the capex as of date, the plans what we have in hand.
And you haven't spent much on MDF as of now. So 550 crore is the incremental capex on MDF, not the total capex.
No, I'm saying the total capex. What we have invested right now is only around 20-25.
Yeah, that is for land only.
That is only for land because we have ordered the machinery and this we have given some advances only. Most of it will go through LC initially.
So sir, considering the kind of cash flows you are making, why would your net debt be 500 crores? Wouldn't it be little lower than that, or you are taking into account the working capital needs and therefore the 500 crore debt?
Yeah, because see, if today you look at it, our gross debt is close to around 180 crores.
Yes, 186 crores.
186 crores, and we also have a cash of around 120 to 130 crores. Now, all this cash will get absorbed in terms of my equity investment in these 2 projects. So there won't be any cash, let's say, so 130 crore of cash which is there today, plus the incremental cash which we'll make in the next 2 quarters is like the equity investment which will go from our side in both these plants. So next year, whatever cash accumulation I'll have is the cash which I'll have in hand, and the debt will be somewhere around, if you take 180 plus around 370 and 80, 450 plus 180, so it's around 650 crores of debt. 650 crore debt minus around 120, 130 crore of cash. So that's what we are talking around 500, 520 crore of net debt.
So this net debt, what Manoj is saying, includes working capital also.
Yes.
For Lucknow plant and for MDF probably.
Okay, sir. Thank you so much.
Thank you. The next question is from the line of Vijay Karpe, an individual investor. Please go ahead.
Yeah, thank you for giving me this opportunity. I'll quickly congratulate the Greenply management. I think so you all have done a very, very nice job on the working capital side, and now we are on track to double our gross block in the next 2 years. My first question is, our current plywood capacity is 35 million square meters. Is there any scope of debottlenecking here? If any, what can the capacity go to by modernizing the equipment? The second question is, what is the rationale of going for the new UP plant? Because in our own manufacturing plants, we have a lower ROC versus the outsourcing plants. That is the second question. The third question is, what will be the outsourcing mix post the operationalization of the UP plant?
Vijay, one, your voice was not totally audible, so we have not been able to totally follow all your queries. First question, which I understand you are saying is, by doing some line balancing and all those, how much we can add to my existing 35 million of capacity, right?
Correct.
Yeah, so I think it will not be something major. Basis the project what we have, we can add maybe around 2 to 3 million at best, nothing beyond that. And your second question, we could not follow.
I think I heard the second question. I'll answer the second question. I think your second question was that what's the rationale behind us putting our own capacity in UP when the ROC is higher in outsource?
Right.
Yeah. So the idea behind that was that the outsource facility where we have equity participation, it's only been 2 years since we've started this activity, and it's still too early to decide that how successful it is. In another year or two, we will understand that. And also, Rather than determining the success, it is also very important for us to find the right outsource partner. Because at the end of the day, we are putting our brand there. And, it's a third-party location where the facility is managed by an outsource partner. So, it's very important for us to get the right partner. And we could foresee this demand and this, a good phase for the industry, this growth phase to come. So we couldn't wait but invest in a capacity because we couldn't compromise on our growth plans.
Yes. And just to add to that, there is always a learning curve, because first time
Mr.
we also...
May we request you that you return to the question queue for follow-up question, as there are several participants waiting for their turn. Thank you. The next question from the line of Gaurav from Bohet. Please go ahead.
Yeah. Hi, sir. Thank you for the opportunity. Sir, the debt which you mentioned of 500 crore, that is on the Concall level you have said, right? Including the Gabon debt.
Yes.
Okay. And sir, if I were to ask you on standalone, only for the India business, so should I just...
Just let me clarify again, net debt.
Yeah, in that debt. So, sir, for the standalone, how much would that be if you just take the India business?
Well, net debt, if you will look at it, you can reduce it by around 110 odd crores from the same.
Okay.
So actually, standalone, when you will look at it, it will be slightly different because see, we have opened 2 new subsidiaries.
No, sir, I understood. That's why I mentioned India business. So I am not talking about standalone. It's the India business I am talking about. Okay. And sir, there's another clarification.
Including the 2 new Indian subsidiaries.
Yeah. And sir, just a small clarification on your cash flow statement 6 monthly. So in the cash flow from investing activities, there is an item of 31 crore, which is investment in acquisition of investments. So this 31 crore is for the Gujarat subsidiary that we have acquired. Is that correct?
No, so we have acquired land. So basically the company was a very small and new company. So the acquisition cost of company was not much. It was in lakhs only. But after that, we acquired the land in the company. That is what we
Okay. So that 31 crore pertains to that, right?
Yes.
Okay, sir. Thank you so much.
Thank you. The last question is from the line of Nikhil Agarwal from VT Capital. Please go ahead.
Yeah. So your plywood realizations have gone down. Is it because of the increasing mix of trading, your trading activity?
Mr. Nikhil Agarwal, may we request you to speak louder?
No, we have heard the question. Yes, you are right, Nikhil.
Okay, it's because of the mix of trading activity. And so you said that the German vendors, they have their capacities are completely booked till FY24. So because of that, you said the organized players, the major players use German vendors for their plants. So does this mean that we cannot we can't expect any more capacity to come up from the organized players?
Well, look, ultimately these are words what we have heard from them, and what is the real truth that we don't know. But this for sure we feel gives us that comfort that whatever capacities are already announced by all the major players, it's something which will come by that time, and the new capacities after that can only come in FY25 or 26.
Okay, that's it from me. Thank you so much.
Thank you. The next question is from the line of Karan Bhatelia from Asian Market Securities. Please go ahead.
Hi. Thank you for the follow-up. Sir, just wanted your views with respect to Gabon business. So how are things shaping up there with respect to logistics? How do we see margins shaping up, because we are still far from the historic highs? So what is the update over there?
So current 2 things, the historic high is actually become historical only. Because after that, there was a big drop in the operating price itself. So, looking at or thinking about a margin of 18%, 20% looks to be like a distant dream. And currently the challenges are almost similar as of what we are talking in the last 3 to 4 quarters. The challenge is only from the shipment side, not getting the vessels. And we always have a good amount of containers which is waiting for the vessels. So keeping that in mind and working capital involvement, though the order book is very good from Europe and even India and Southeast, we are limiting ourselves so that we don't end up blocking too much of working capital also. There is a risk factor. Keeping all these things in mind, we also assume that our H2 performance will also be something similar like H1 performance, which means we will not be able to fully utilize our capacities also. And in terms of margin, I think the margin can be slightly better in H2. That's what we see, because in H1 also, as you know, the freight costs have gone up significantly. We were also caught on the wrong foot in some of our arrangements where there were CIF orders. We have negotiated some of them to convert them into FOBs. I hope that there are no fresh incremental costs which comes and hits us there. So we might slightly improve in margins in H2 there. And the sales may almost remain similar as H1 sales, or slightly better.
Right. And just one thing, we've sent our first shipment to US. So any concrete signal from them?
Well, the initial feedback was good, but then that was just before the pandemic. And then, as I said, that there are so many limiting factors now, especially the shipment side. So that first consignment itself took us almost more than 6 to 7 months for them to even receive it. So we are slightly not very gung-ho at this point of time. Let things stabilize. We definitely see that also as a market. But today, if you really ask me, we are full of orders even from Europe. As I said, we are cutting down on our order book so that we don't get caught on the wrong side of adding up too much of production and then all of them lying somewhere at the docking station.
Right. Okay. Thank you for the detailed explanation. That's it from my end. Any follow-ups, Jacob?
No.
Okay. With this, we conclude the call. Thanks the management team of Greenply for answering each question in detail. With this, we conclude the call. Any closing remarks management you want to make?
Yeah.
Yes. Just to reinforce whatever has been discussed in this call till now, the entire industry is at the cusp of transformation in terms of technology, product adaptation, consumer behavior, consolidation, etc. As an industry leader, we are gearing up ourselves to stay ahead in this journey by several initiatives like product innovation, business sustainability, product category expansions, IT infrastructure and automation, etc. With this perspective, I would like to thank you all for taking the time to participate in this call. In case of any further clarifications or queries, please feel free to reach Mr. Gautam or Mr. Mukesh. We look forward to speaking to you in the next con call post our Q3 FY22 result announcement. Thank you.
Thank you. On behalf of Asian Market Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.